everybody. Welcome to TraderMerlin Show for your Wednesday afternoon edition. I hope you enjoyed my graphics I made for today's show. I was enjoying it. It was, as you guys know, I mentioned I've been short Facebook, and I put a so far out of the money buy to cover because I was trading individual equities. I put an order out at 252, and I was like, maybe they'll have bad earnings and it drops down to a demand zone that was just slightly higher than that. But all of a sudden, the bottom fell out of this thing, and I thought, you know what? Let's create a fun graphic. It says, hey, Google, hold my beer. And I've got a picture of Facebook passing a beer over to Google. Because yesterday, it was awesome to see, Google report their earnings and all of a sudden give that 20-to-1 stock split, which, started things off great today. Of course, it started off last night after the announcement. Things looking great and all of a sudden moved to the upside. And Facebook creating a popcorn trade of the day today, John, that just smoked it to the south side. And it was funny because I was actually in a session today with Todd Davis. We were doing a little special event for Chicago because I guess Larry Jacobson's going to be out there in 2 weeks doing a thing on options. Like, hey, let's just do a little give back to the center. And I actually thought that Facebook would probably beat earnings today. Same with Amazon tomorrow, but they missed, and it's fine. Even though I thought that they were going to beat earnings, I'm still holding short because I think it's going to be down the road, be more pain for Facebook. But I did not expect it to fall like it did. So let me bring up some charts here so I can show you what happened with Facebook. It just absolutely slaughtered today, and I love it. And I'm out. I'm presently out. Hello, Tony. Good to see everybody. Sorry, I'm just rambling on today. I didn't have enough time to really prepare a great show for you today, but I do have some questions that came in on different equities, so we'll dive into that. Luckily, right now it's at 252.47. You can see that there was a demand zone that kind of goes right back into here, this cluster, but I kind of said I was just going to put it even below that and go for this demand zone here, which is the 252 mark. I'll move it down to exactly 252, just so we can see exactly the number. So 252. All right, so that lower line is kind of where I had my order, and that was really the very, very upper end of this demand zone that goes all the way back to January of 2021. So, you look at where it was today when it closed the market was roughly 323, and you're like, okay, no big deal, that's fine. Right now it's at 252, which is a drop of 80 or 70 points for Facebook, and I'll show you the after-hours session, which makes it even prettier or gruesome depending on your perspective. But there it is. It was literally a couple minutes of time where this thing just cratered. Now, of course, some of you are going to be smart Alex and go, well, why didn't you sell it at 246 or buy back at 246? You gave up $6 worth of profit per share. I don't care. I'm happy to get out where I got out on that one. Now, I didn't look at the statement to see what exactly their earnings numbers were. Actually, I did see their earnings numbers, but I didn't see anything about their forecast going forward. Clearly, cannot be very good given what happened. Here is here is your earnings calendar for today. You can see right at the top, Meta Platforms, formerly known as Facebook. They only missed by 11 cents. It's not that big of a miss, but they have to have said something about advertising and subscription base going forward. Unfortunately, I just hadn't had time to get to those numbers. Down over 20% as we speak right now, almost 22% to be precise. And you can see it was kind of a bloodbath for most things. The only one in there that really had a great update was Marathon Petroleum in the middle of the page, which blew out earnings. They're expected to make 47 cents per share. It came out at $1.30. Pleasant surprise. And they were only up 6% on that news. GD says, gap on Facebook at 235. No, unfilled. Yeah, there is one. Honestly, I didn't think we would get that far down on Facebook today. I really didn't think it'd be that low. But you're right, we do have this unfilled gap. It goes all the way back here, starting at 247, all the way down to 232, right, roughly that area. It could very well fill that. But what we've seen lately is a lot of these FANGs, well, I can't say a lot of these FANG stocks. We saw it on Netflix, right, where you had a huge sell-off off of earnings. Let me get the right similar. And all of a sudden, it comes ripping back up. Just a little bit of a knee-jerk reaction, oversold. And I think you'll probably see something similar with Facebook. You can see how Netflix gapped down huge, sold off for a couple days, and then a really nice pop. But keep in mind, that's why the entire market popped, right? This whole rally up in Netflix is because the Nasdaq did that. Now, we have this, what's called a dark cloud cover. Some might call this an engulfing pattern today on the Nasdaq, which, of course, is a rather ominous sign. A large part of this is coming in the after-hours session. So if we look at the Nasdaq futures here, I'll put them on a 3-minute. You can see that for the most part, it was looking pretty good. And then Facebook reported earnings and just cratered this thing down. This is the problem. Remember, Facebook, I believe, was 4.8%. It's going to drop below that today. But it was 4.8% of the Nasdaq 100. Now, we still have Amazon to report tomorrow, which will be obviously very interesting. But that was enough to bring this whole index down significantly. Now, it even impacted the S&P, which, of course, Facebook is in there. And you can see we were up at right around, call it 45.80 on the S&P, and then all of a sudden, Facebook reports, and we dropped significantly. So giving back a large part of those gains achieved today because of what happened with Google. Right now, it's like you've got one huge victory with Google. You've got one huge loss with Facebook. We'll see how tomorrow pans out. But remember, after market tomorrow, you definitely have a monster popcorn trade of the day. That's going to be with Amazon reporting earnings. And here is what they're doing right now in the after-hour session. Amazon, even though they didn't report yet, it's a sympathy sell-off with Facebook. So they're already down about 3.3%. Facebook, we mentioned this before, leading on the way up with all these FANG stocks. Now all of a sudden we're seeing them pull down. The only one that's been doing great anyway has been Google. We'll see what Amazon does tomorrow. But there's your 3-minute chart. Here's your daily chart of Amazon, which has had a pretty nice bounce over the past couple days, but still down significantly from its 2750 highs. Yep, Google doing that 20-to-1 split. And I think, we'll have to, I wish I could input polls here in the group. Maybe I can. Can I do a poll here? Create a poll. Oh, this is going to be good. Let's see. Sorry, my typing is absolutely awful as I'm trying to do this and do the show. SPLIT. So let's see what you guys think. I'm going to ask my community. I've never done a poll because I'm usually too busy. Oh, did it show up? I'm hoping it showed up for you guys. No? Did a quiz show up there? The poll I just put up there. Oh, there it is. Cool. Amazon stock split tomorrow. So obviously we're going to get the earnings announcement. It's a question of, is that stock split going to happen? Because Google did it, and it would not surprise me right now to see Amazon do that as well. It should be, there we go. I can see the poll results over here. This is great. It's weird. I can't see the overall. There we go. Nice. Unfortunately, I can't show you my screen. Maybe you guys can actually see. I don't know what you're seeing, actually, but I've got 76% of you so far saying yes, stock split tomorrow. Remember, the odds are against it. It's such a rare event for that to happen, but it seems like the proverbial ducks are lining up in a row here to make that happen for tomorrow. So, cool. Glad it's showing on your guys' screen. Amazon is raising the Prime membership to, everyone's raising their costs. Remember we talked about Netflix, and I said what could save Netflix and get them to the next level was creating different products and services, right? Like Netflix Sports, Netflix, rom-coms, Netflix reality TV channels, splitting up like that, or raising their fees, which of course Netflix is. They're raising their fees again. So I need a choice of, I hope so. Love it. All right, well, I think I got most of you in there. It doesn't tell me how many have reported, but you've got 62% of you saying yes, 38% saying no. It's a coin toss. It really is a coin toss for me at this point to see what the numbers might be for tomorrow with regards to Amazon, but also do they do a stock split? At $3,000, even a 10-to-1 makes us a $300 stock. And again, as Tom points out, it would make it much better for options. It would also, bring in a lot of these Wall Street, Reddit room type of people who don't have a lot of money. Not to sound negative on it, but hey, a lot of people don't have huge amounts of capital. And at $3,000 a share, that's a little pricey for most people. Chris says, I vote no. Did Amazon just... Yes, they did. They did raise their rates. There we go. Bring in the retail with the splits. Exactly, Chase. Totally. I think that's what will probably happen in my book. We'll see. I'm voting in the case of yes. I wasn't anticipating Google doing it on Monday. I was really on Tuesday. I was really focusing on the Amazon one, but Google was a prime candidate for as well. And if you look at how many of only 37 out of 53, huh? It's all right, Les. Not everybody likes to participate. If you look at how many stocks are over, let's say $1,000, there's been a lot more of them, granted, than there has historically been, but some are just really pricey. And it's a psychological game to play with consumers to do a split because everyone thinks they're getting a special value. It's like, no, you're not. You're getting a cheaper share price, and there's a lot more shares. It's very, very simple math. All right. What are some of the other ones? I want to look at Align as well. So ALGN, that's one that has been really getting clobbered lately. Of course, a lot of people with straighter teeth because of Align Technologies, but they reported earnings that were better than expected, and they were slightly down in the after hours. You can see right now trading at 476, which, one platform uses the arrow up and arrow down to zoom in and out, and this one uses the wheel. You can see that just down a little bit in the after-hour session, not quite making it one of our popcorn trades of the day. The other one that had some pretty big swings was Spotify. So here's Spotify. They beat earnings handily, and who knows, maybe this earnings announcement has something to do with the whole Joe Rogan fiasco, what's going on there, and we won't go into that. I'm sure you guys all have your viewpoints on the Joe Rogan controversy. I did watch his comment about all this controversy. I don't know if you guys caught that as well, but I actually thought it was really good. It's basically like saying, if you look back in history, there's moments of times where everybody says, well, that's misinformation. You're spreading lies. You're spreading blah, blah, blah. And then as time goes on, we learn more about it. And what people said was lies, let's say 6 months ago or a year ago or 10 years ago, is now truth. And the mainstream media is spreading that truth. So, it was pretty cool to see Joe Rogan kind of toe the line and be humble about it at the same time. But yeah, it was, who knows if this Spotify chart right now is reflecting some of that or just the earnings, even though they beat by 46% on earnings, still down 5.75, actually down 11% right now, so still falling in the after-hour session. That was 5.75 during regular market. Now it's actually right down here at this little blue line, right at the demand zone, which I'd be looking at a potential buy point on Spotify. Now, if I zoom out a little bit more, let's go to a weekly here on Spotify. You're looking, I actually remember we talked about Spotify, looking at this kind of demand zone back here that was in June of 2020. Right now is not a bad time if you think that this is going to bounce back up. I think that the Spotify controversy is actually great for Spotify. It's bringing in more people going, hey, you know what, we're with Spotify. Your freedom of speech. If Neil Young wants to pull his stuff, great, go for it. But we'll see how it polarizes America even more. All right, let's see what else I have here. A huge part of the market is based on a pair of websites, apps, Facebook and Instagram. Yep. Yep. Time-wasting, user-generated content. I'm with you. Here's the thing. What was that movie? I think it's called The Social Dilemma, right? Where they really did some pretty interesting studies on how it's polarizing people and can change people's mindsets given the social media that they're feeding. I thought it was pretty interesting. I mean, they have, in my opinion, created absolutely addictive properties to those social medias. We're probably in a year or two going to see people needing to go get thumb surgeries from swiping all day long, moving up and down and scrolling through Instagram and Facebook posts and TikTok. It's crazy addictive stuff out there. I've made it a point. Now, it's not one of my monthly challenges, by the way. I was going to start the monthly challenge again for all of you and see if you wanted to do it. I was going to do 50 burpees a day because I can't do 100. But actually, I just reopened my gym membership, and I'm just going to be going to the gym probably 5-6 days a week now to get back in shape here. But I don't know if I can do the 50 burpees. Maybe if you guys want, I can start up a list here. I guess I need to pick one thing that I'm going to do every single day for the month. So there you go. And I know. Should finish my book, right? Finish your book, Merlin. Okay, didn't Spotify? Yes, Spotify dropped big time after hours. Big Eb, that's right there, and you can see it. This is the weekly. Let's go to the daily. Today was ugly, down 5.75%, but the blue line right here, the blue box, it was post. So it's down another 9%, almost 10% in the after hours session, trading at 172. There you go. At some point, I think Spotify will probably be a pretty darn decent buy. Okay, so that was it. I just thought it was interesting to see Facebook. This week, obviously, you've got three horsemen that are just monster. You've got Google, you have Amazon, you have Facebook reporting. Huge swings in the market. Was to be expected. I didn't expect it to be down today, but I had an order in place, and luckily it got me out. So I'm out of my shorts on Facebook. I did add 5 more puts to my put position for S&P. So now I have 10 S&P and 5 Russell 2000. And I'm still short QID, and I'm still still long a couple of marijuana penny stocks, but that's not that big a deal. And long 3,000, 20 to 1 equals 150. Yeah, exactly. If they decide to split, if Amazon decides to split, sure. All right, so like I said, I didn't have time to go through all the emails and all the questions. I wish I did. I just was so busy doing things for others today. So, for example, I did that event for Chicago. So let me real quickly check and make sure I didn't miss any questions that came through on the YouTube channel. I didn't get a chance to check my email, at least not in lots of minutes. Susan, yeah, a couple days at $100. Cool, 130. Cool. We're just commenting about my Ford comments the other day. So let's look at S&P. Oh, God, PayPal, Nick. Ooh. This is one where I want to grab like a katana and just do seppuku, right? PayPal's like a murder scene right now. And which is crazy. You know, it's not like people aren't using PayPal. We had this zone drawn out where it was consolidating sideways, broke down. I hope some people took that short. Now the question is, and what the heck do you do right now? Down 24% on their earnings. Ouch. And another almost 2% in after-hours session. Ugly. Ugly. Yeah, and of course, Iron King, that's because of Facebook. Facebook alone is what's causing everything to drift down after hours. I physically sold the shares. I had 100 shares of Facebook short for a month or so, Rob. And I'm out now, so happy about that. With PayPal, you know, the question is, where is it headed? And we talked about this gap, right? There's a huge gap over here, which honestly, it's a gap fill right now. So I'm really interested tomorrow in actually going long PayPal. I know it sounds crazy, but let me just zoom in right here, and I'll put a line right across those levels. All right, so we'll put a horizontal line. I'll take these ones down. They don't mean anything anymore. So I'll put this right at the origin of the gap, which is right around 128.57. And right now, we are ever so slightly above that number with this gap. All right, you can see it. We actually are tip-tailed down to it. This could be a nice bounce tomorrow for PayPal. But again, very dangerous. This trend has been absolutely brutal. You can see we hit all-time highs of roughly 315, and now you're down at 130. So, you know, misery loves company. This thing may continue drifting down, but for me, I might actually take a stab at this one tomorrow. You can imagine that the call options on this would be rather cheap if it falls tomorrow or when it opens up tomorrow. So we'll have to wait and see. I may actually look at buying some call options on PayPal just to fill the gap that's created overnight. I didn't look at the earnings. I know everyone's complaining about the leadership, etc. But you know, PayPal is still fairly entrenched in a lot of the purchasing that I do. So I can't see this thing just dying altogether. Now, you look at this huge move and the sell-off that it's had. So I'll go from where it was to where it's at right now. And we're looking at a decline on PayPal of roughly 58%. And it's still not back to where we were pre-COVID. That's kind of an interesting one. When you look at where we are currently, we are still above the peaks. Right? Those were all-time highs for PayPal. The all-time high that we had right as COVID was hitting actually was a high of about 124.45. And here we are even higher than that now. So it still has some room to go back down, that's for sure. But you play a bounce. I'm a huge fan of gap fills. Well, we gapped right to it. And I think we even talked about this on the show. We talked about so many things I can't remember at all. I apologize. So you probably remember. And I believe we talked about when it breaks this one that there's this unfilled gap way back here. And that to me is a magnet to price. And it just sucked right to it today on this earnings announcement. Keep in mind, it wasn't all just because the earnings. There was momentum that happened intraday. If we do like an hourly chart, you can see you had the big gap. Get out of extra hours. You had the big gap, and then it continued to sell off in the opening 3-4 hours. So it was momentum, not just a gap and run, but pretty ugly at this point. I think I remember some of you actually being long Spotify, and we're going, why? The trend is down. It really is. When we were back here in this yellow box, there's no reason to be adamant about a direction. If it breaks down below this lower yellow box, short it. If it breaks above it, go long. Simple. Keep it as simple as possible. So going long, I guess you could say you're going long at the demand zone, but if that demand zone's violated like it was right there, you got to get out. Even though we rallied back up towards supply, today's earnings announcement was just absolutely ugly, brutal. Nick says blame it on the management. I don't know. Unfortunately, I don't look deep into fundamentals that much to really break down all that stuff and what the manager's doing. I just look at price. It's just easier. When you look at management, it's easy to say, oh, it's so-and-so's fault. But I'm not in meetings with, these guys. I don't know what they're actually talking about or what they're doing, if it was one department that failed or a failed product launch. I don't know. I just find personally that's just too time consuming for me. I already don't have enough time in the day to prep and do everything that I need to do, let alone analyze all these companies. So that's just my take on it. I'm oversimplified, guys. I don't need to spend that much time on it. People like Larry love to look at that stuff. Let's look at the fundamentals and dig through it all. Cool. To each their own. But that's definitely not for me. Where is the Facebook gap? Let's go to Facebook, show you on the daily here. When you look out, there aren't any that have been that are unfilled, right? There's none in this that have been unfilled because everyone except this bad boy all the way down here at 232 have been filled. I put my order out, as I mentioned, just as because I'd been short. It was just all right. If it does have a bad day, I want to get out on the knee-jerk reaction because generally what happens is it'll sell off so much, it'll oversell off. And that's why I have that letter there. But you see the gap is slightly lower than that. The gap is like the 234. But every other one here is filled. There's some small little gaps. You could argue that there's a gap fill right in there. You could argue that there's this original one that happened back here on April 27th, right? That one filled aggressively right away. We don't have any downside gaps that are unfilled except this big one that I'm pointing out right here at 320. Facebook is a new Friendster. Okay. I don't know what Friendster is. How many billions did Zuckerberg lose? Mike, I mean, it's fun on paper to see how much he lost, but are you really going to lose sleep over it? Come on. It makes no difference to me how much he made or lost. I mean, obviously he got smoked today. I used to have sites I could go and track how many shares each person had. But right now what they're doing is they used to keep all their shares and it was public record. Now what they're doing is they're putting their shares in holding companies and spreading it around. So now you really have a hard time figuring out exactly what they have. I know that Zuckerberg and his wife are both putting their shares in these different charitable trusts. So it kind of, you don't really know exactly how much they have. How about our dying Bitcoin? And what are your thoughts about that we are in a Wyckoff accumulation phase preparing for another up move? Let's check out Bitcoin. Why not, shall we? Since I'm unprepared for today, let's do it. So I still stand by the numbers I have on the screen here. Today you're down 4.6% on Bitcoin. It wouldn't. Again, I still think we are going to test this 30,000 level. And personally, I think we're going to break it. I know it sounds awful, and you guys are like, no, you can't. I think you're going to break the 30,000 just to test people. It'll have a sharp spike, and then I think the accumulation will start to begin. It's just too obvious, right? You look at this chart. It's too obvious that this level right here at 30,000 is the number. So to me, what I believe will happen is it's going to come down. It'll probably bounce off 30,000. It's going to break it. And that's when the retail investors are going to be like, oh my God, and just crap themselves. And this thing's going to go bam, real quick down. And then it'll rip back to the upside. And I think at some point, you're going to get the buying frenzy to come in totally. But again, look at the unfilled gaps. I talked about the ones on Facebook. Oh, crap. Put that right there at 30,000. You've got some pretty big unfilled gaps here. You got one unfilled gap going all the way back to 23,500, and there's another little one at 18.2. And I've talked to some friends who are all crypto people, and they're like, there's no way it gets here. I was like, you would have said that last year. There's no way it gets to 68,000 in a couple of months, right? So I still think there's downside here. I think there's downside potential. Long-term trend is definitely up without question. Let me put this on a weekly. It's definitely up, but if I put lines connecting long-term trend, which would be to me more sustainable, you're looking, there's a trend line. Somewhere around that would be a sustainable trajectory, in my opinion. This angle here is not a sustainable trajectory. That's a little bit too sharp. That's just a massive increase. Now, granted, this is a new asset class. It has different metrics. It has tokenomics that are completely unique to the financial markets, but I'm a long-term bull. Everybody knows that. But right now, I just feel bearish on it. Trend is your friend. It's selling off aggressively. And this, to me, is the last big backstop is 30. And I think it's going to be like dragged to it. I think it's going to drag to it and then break. But we'll see. I've still got a bunch of capital waiting to buy into the crypto space, but I'm just holding off. I've been dabbling in and buying in more on these dips. As I told you, I've bought some Solana, I bought some, no Chainlink. Polygon, I have orders for more Solana and Chainlink, as well as Atom and Cosmos. But I bought some Bitcoin, I bought some Ethereum. So I'm adding, but not aggressive. Not as aggressive as I want to be. So there you go. Long Ulta, ULTA. You gonna get some makeup done over there, NJ? Work on the eyeliner. Get that punk band going. Gonna throw on the Cure CD and prance around the house with some hairspray and some eyeliner. Ulta, long Ulta. Okay, this is a tough one because you look at the trend, right? It is obviously very aggressive, but everything's really aggressive since 2020, and it's surprising that Ulta is just taking off like this with COVID. Like, you think people are staying at home? Ladies, why are you putting makeup on? Zoom calls? Come on, just throw a filter on that screen. You're good to go. I don't know how comfortable I'd be with a long on Ulta. While I know why you're looking at it, it makes sense because you're in a strong uptrend. It's a pullback during that uptrend. But my bias is going to hurt me here because my bias is saying these markets are showing weakness. I'm seeing that now with the tech stocks. I'm seeing that now with the broader markets. And I'm going to be a little more apprehensive on buying near all-time highs. And look where Ulta is. You know, this is a weekly, by the way. Just so you go back to 2009 on this thing, Ulta was $4 and now it's 10x'd. Well, you know, that how much juice is left in Ulta? I don't know. I don't know how dominant they are as a player, but even though it's had a nice bounce the last couple of days, and I see why. If you bought, you were probably, since NJ, you're an OTA guy, you know, you're probably looking at this little area that was the origin of that move as the buy point. Fine, I'm cool with that. But you're going to have to make sure that if you are long, that you put a stop loss in, because if this market does in fact roll over, as I think it will, probably not this week, but I think in the next month or two, couple of months, we'll see a bigger sell-off, then you better have that stop loss in place, because that's, you know, once this thing goes, and it does go with fear, this market's going to move down very quickly. You know, you look at what happened to the S&P, and it went very quickly. I mean, this was an aggressive move that happened. This is weekly, so we got 1, 2, 3, 4, 5, 6 weeks, really, was this entire move from the COVID thing, and that was aggressive. But the first one started off kind of slow, and then once fear kicked in, it ripped. Yeah, my IWM puts look good today. I'm pretty much a wash, Big Eb, so I made money on my IWM. I was down on my S&P at a break even. Now, because of the way things are going, I'm up on both of those for sure. We'll see how much tomorrow, but I don't have any intent of getting out of those just yet, right? Amazon's either going to love me or hate me tomorrow. You know, if Amazon does what Facebook did today, you could see a big crater. But again, where's Amazon come from? You know, Amazon to me has had one of the bigger declines from the FANG stock space. And I'll go from peak to trough here. You're down 28% on Amazon. Facebook, prior to the earnings announcement, wasn't as bad, right? A little bit better. 25%. Let's go look at Google. Look at that move today in Google. Just broke to all-time highs today. You know, Google is only down 18%. So let's see, you got your Facebook. Oh, let's go to Apple. So Apple barely even sold off. I mean, come on. Apple was down 15%. So AA, we already looked at Amazon. Netflix. Right, so Netflix is the worst of the group with regards to percentage declines. Down 49%. So out of all those FANG stocks, you know, Amazon was near the bottom of the barrel. Now, I'm pretty sure we would all agree that Amazon is not going away. I mean, Amazon is an entrenched part of society. For me personally, I mean, I use it all the time. I needed a new fixture for my shower, a new thing for the shower because the wand just stopped working, and all of a sudden, hey, it'll be there tomorrow morning. I pretty much ordered it from the shower. Amazon's not going away. It's just a question of what's that buy point. You know, where are you comfortable buying it? If you go back to the highs from 2020, you know, they hit a high of 2183. Well, after that, we peaked at almost 3,800. So granted, there was probably an overvaluation, and I believe that a lot of these companies are overvalued, very overvalued. And as we see earnings numbers roll out, it's the ability for them to maintain those earnings going forward with consistency. If they can't do that, they're going to sell off, period. And I think that's what we're seeing right now. BTC on the monthly chart, 12K is in possible demand. Yes. Yeah. 12K for sure. You know, it seems crazy to think it could get that low, but it could. Now, I don't know specifically if a 12K, if I would call 12K a demand zone. You mean this like this long kind of sideways piece, I think I'd be looking more on this weekly at this rally kind of congestion and then the big rip out, because we've had these double gaps. I mean, this was a 3-week period of time that was heaven for me. We went from 19,000 to 40,000 in 3 weeks on Bitcoin. Let's do it again. Let's do it again. Snapchat down over 21. Don't tell me about it. I was short Snapchat and I got out. I think on Monday I exited my Snapchat. I had a nice gain. Down 17% after hours. You're killing me. I got out at 30.50. So 30.50. So right there was my exit yesterday. And I was fine with that. Look how this thing just being obliterated. So I was fine. Did okay with that. But right now down at 26.40. Where does it go? Hell if I know. I don't use Snapchat. I don't know many people that do. To me, that's just a dying one. That's a Netflix or Napster type of thing, a MySpace thing. I think it's going away. So I wouldn't be buying this at any price, honestly. But where's it going to head? I mean, you look at this sideways consolidation here. It's not really a strong demand zone at all. You look at the price turn, but it really, if you run the odds enhancers from OTA, it doesn't really qualify as a strong demand zone. I prefer this one that goes all the way back to $10. If it gets down to $10, maybe I'll look at it. What did Chris say? It always happens to me. I bought the dip and it kept dipping. Stop losses, Chris. That's why we have stop losses. I did. So we can go out here. Yes, I did see the news, but just because I haven't had time to bring up all the charts, I'll just go and show you. There's your ADP non-farm employment change. Remember, I was mentioning, so look, the previous number was 776. They're expecting it to be 185. Actually, I think this changed last night. This was like 800 and something, because I showed you guys a chart of it yesterday. This was a huge drawdown in ADP non-farm employment change. Just by itself, forget all the Google news and Facebook news. That was pretty negative to begin with. But they came out at a contraction of 301,000. That is not good for the Fed. Right? The Fed's going to look at that and go, man, we have to do something to get full employment. Remember, it's one of their mandates is full employment. Well, when you have this big of a contraction in jobs, that doesn't bode well for it. Now, here's where it looks like on the chart. It's interesting when you look at this chart of the ADP non-farm employment change, because this big negative spike kills everything. So I like to remove that spike from the equation to see what it looks like now. And you can see it's the second time we've had a contraction in the ADP non-farm employment change in 2 years. We had them on January of 2021, and now we've got them in February. So maybe it's a seasonal thing where January and February we see a lull. We'll have to really wait and see what happens in March. It should go back positive. If we see more negative and even lower than, let's say, negative 300, then we're in trouble. And I think the Fed has to be much more active with regards to stimulus. And now we go into the stagflation thing. Remember some of the qualifiers for stagflation. You have to see slowing growth. Well, we don't see that because we had almost record GDP numbers. You have to have slowing unemployment or slowing employment. This number would reflect that, right? They're still going to look at the unemployment rate, and you still have the employment numbers coming out on Friday, as Big Ed mentions. But this could be a precursor to it starting to slow down. Now, what are the other? There's some other pieces, but I can't remember. But there's kind of 4 criteria you look at with regards to stagflation, and 2 of them we've already we were in the midst of. I forgot what they were. Rising inflation was one of them. What the other one? So you have unemployment, you have GDP, you have inflation. There's one more I just can't seem to bring off the top of my head. So John says, I think the ADP number is overstated and is not month-over-month activity. Lots of employee buyouts. Yeah, with all this data that I show you or that you look at, whatever it is, anything on here is, in my opinion, rigged. So, my skepticism, my conspiracy theory guy in my head says, well, is this being manipulated so now the Fed has an excuse to stay the course and continue to be aggressive with their policies? I personally think that this other number, which we'll look at from last Friday, go to calendars and go to last Friday's number there. You look at this PCE Course Price Index. This is the number that's more important. We've been higher and higher and higher. To me, that was one that I think is more important for the Fed. But still, I think it's all cooked. I think this is all manipulated garbage. But we have to look at it, right? I mean, I need to know what's happening tomorrow or the next day. I mean, Thursday, we'll look at this in just a minute. But, obviously there's a huge day tomorrow because you have rate announcements happening for the British pound and the euro, right? This is still pretty big. And they're expected to raise rates. So there you go. You have already the liftoff. Now, if you look at the historical trend for the UK, here's their rate sheet. This is going all the way back into 2000. I think this is really important to look at because if you look at where their rates were in 2000, right, that's the dot-com bubble. The UK official bank rate was at 6%. All right, it sold off a little bit, rallied up to 5.5%, 5.75% in 2008. But notice ever since, does this look like something's broken and just not normal? Yeah. Now they're starting to raise rates a little bit. So there was this huge currency race to the bottom to get everyone's Fed funds rate down to zero so they could stimulate their economies. And now it's coming back to bite them. I've been saying this for the past couple of years. And unfortunately, last year and the year before were years that I felt this thing's going to come to a grinding halt. It hasn't happened. And maybe I was just a little bit ahead of myself. Of course, I know at some point I'm going to be right and I can boast about it on TV and things. I'm just kidding. But we will have at some point some major correction because those rates need to get back to normal. And normal doesn't mean 6%, but 3%. Somewhere up in here is normal. And you look at what the euro is, their main refinance rate. Think they're any different? Here's the euro going all the way back since they were started, 2001. Right, so what's normal? Well, normal would be around 1%, somewhere in there. So, I think this is gonna be probably the most exciting year for the markets we've seen in a long time because of all the political issues, the putting the Fed in a corner, and all the problems that I think they're gonna be facing. So it'll be exciting, and I'm hopeful that it will be a very profitable year for all of us. Okay, the stimulus package funding required companies to keep people on the books. Yep, through the end of the year to get it. Oh, cool. The poll just showed up there. 57 votes. Cool. We got most of you guys voting. I appreciate that. Got to get the activity out there. All right. I had a couple questions, and I wrote those down. PayPal was one that we already addressed, so I won't look at PayPal. The next one that came through it was GameStop, GME. So let's bring up GameStop here. What's my thought on GameStop? You guys all know this thing's trash. It's garbage. Dump it. Don't buy it. Right? If anything, you sell some calls up at 175. You probably get yourself 1% a month or something. And you're way out of the money. I mean, there is the risk that this could have a pump, a short covering pump from your Reddit, Wall Street Bets type of things, these diamond hand guys. But, this one's going down. It's going back down to its trend line, which, in my opinion, if we do a loose trend line here on the weekly, let's just, that would be aggressive, in my opinion, to say that it's going to get back down to $39. Well, could easily do it. So I personally would stay away from GameStop. Buy some puts if it rallies because you can maybe get those puts for cheap. But the implied volatility on this thing is off the charts. It's really expensive because it's just such a wild card. Here's your daily of it. That's a beautiful daily chart, is it? There you go. The daily chart. You go back to November of last year. This thing was $250, and this day right here. You guys might remember, this is the day that GameStop said, for those that listen to the podcast, January 7th of this year, they made an announcement that they're going to be doing NFTs, to which I responded on this show. This will probably be the easiest short that you're going to have, is to short GameStop off that news, because how dumb is that? What are you going to buy an NFT from GameStop of? A video game cover? That just seems idiotic to me. So that was an easy short, that one. What else did I have? Square was another one. And this one, I'll be honest, I'm kind of torn. We drew this box a long time ago where it was just kind of range bound for a long period of time. I can get rid of that because it is absolutely gone. Sell puts at the 155. I think I might have done this, and I'm not sure. I don't remember what that was all about. I got to write these things down even better. But you look at where Square's at right now. Square is not looking great. Obviously, they're getting crushed. I love the fact that that Jack Dorsey is changing the company's perspective. He's turning Square, it's still a payment system, but I believe he's turning it into more of a Bitcoin-centric program. So now, I've always said to my friends in the crypto space, I think one of the best things we can do is find ways to make crypto used for digital payments. Now, Visa, MasterCard have that market cornered, right? You have cash in your account, and Visa, keeps track of all the records and everything. If we can do something similar with Bitcoin or Ethereum or Litecoin, or what my idea was to have an exchange. So let's say, Poloniex. You can take like Poloniex or Kraken and take those assets. You can keep whatever you want there. So let's say right now I have like 39 different cryptocurrencies. I keep that portfolio, but I tell the card through a setting that I want to be making my transactions with this specific cryptocurrency. Let's say it's Bitcoin. So if I go and buy a Starbucks coffee, I want to buy my ice mocha frappuccino with a pumpkin spice on top. Who the hell would drink that? I slide my card, and it automatically would convert whatever that $5 fee for the coffee was, take that amount of Bitcoin, convert it, and instantly give me payment right there, and they would hold the other as collateral. So now they could have instant transactions. And PayPal and Square, I think, potentially have the infrastructure to make those things happen. So I'm pretty excited about Square long term. It's just right now it's been a pretty ugly transition, or I guess not transition, pretty ugly fall from their peak. Now, if I go back to their peak that happened right around August 2nd of last year to where they bottomed out yesterday, you're looking at a slide of roughly 64%. Right, so way more downside than the overall market. Now, as far as where they're going into, do I see anything here on the side that's really that attractive? I do not. There's one level, which is going to be right in here. Let me map this out perfectly. You're looking at between 83 and 90. That's an area that I would be interested in purchasing some, but that's a little bit of a ways away. Maybe you sell some puts, and that might be something that I decide to do because I do think Square long term will do well, but maybe I'll sell some puts, collect some premium, and if I get executed at 85, fine, I'll take it. So there you go. That's my thoughts on Square. I'm a Jack Dorsey fan. I do like that he's a bit of a Bitcoin maximalist, and I think that he is going to take his knowledge, his influence, his connections, and really help build out the adoption of Bitcoin going forward. If you look at something like MicroStrategy, right? We've all talked about my MSTR and how Michael Saylor is kind of this evangelical weirdo for Bitcoin. Well, what does MicroStrategy really do? Does anybody here really know? Like, what do they do? Okay. Most people don't know what MicroStrategy does. Oh, they're a technology company. Okay. Internet software. Okay. What do they do? Whereas Square and PayPal, we know payment systems, infrastructure for payment systems, clearing, etc. So I think Dorsey could have a much bigger impact than somebody like Michael Saylor, especially if Jack Dorsey starts taking Square's balance sheet and starts buying cryptocurrency with it to hold. On that note, you look at something like Coinbase. Coinbase has made it very clear that they are adding a lot of crypto assets to their balance sheet. So they're buying cryptocurrencies, which may be part of the reason why you've seen such an aggressive sell-off from their high of around 380 all the way down to this low recently right around 180. But if there is that rebound, these companies that are holding such large amounts of crypto, like MicroStrategy or Coinbase, could do very, very well. Poor man's Bitcoin. They seem to be exactly right, John. It seems to me like all that MicroStrategy is just a Bitcoin holding company. It's like an ETF. It's a stock that is Bitcoin. So let's see. A big episode. I sold puts last year and was nervous, but avoided the exercise by $2. Cool. Hey, the best part about it is you can always get out, right? You don't have to be exercised at all. What other comments do I have? How much time we got left? Oh my goodness, I gotta go. Maybe GameStop can change its name to Meta Alphabet and can sell crypto and can never be. There you go. And that's what you'll probably see is they're going to change. I don't know what exactly they'll change their mind or change their company to, but I made a comment for you guys that if I was the leadership of GameStop right now, one of the things I loved when I was a kid, there was an arcade in my hometown where, I asked my mom for $20 to get a roll of quarters and go down there and play games all day. Loved it. Of course, now COVID, who's want to touch little keyboards and buttons all the time? But why not take your available space at GameStop and you create competitions? So I have like 20 stations in each GameStop. And yes, there's a wall of games that people can buy, right? Because that's their core business. But I create it where now I'm connecting every GameStop office to other GameStop offices around the world. And let's say it's a $10 entry fee for these competitions. Well, if I've got 10,000 people, playing in this competition every day, and then maybe it goes to a bigger competition, which I get sponsorships for, now I can start to bring more and more people into my centers. Other than that, I don't see people buying video games from the GameStop. Oh yeah, pinball machines. I almost bought one for my house, but you know what? They break so often, and you got to hire a repairman. Those are a big money to repair. But if you ever have the opportunity, for all of you here, if you ever go to Vegas, just south of the main strip, there is a thing called the Pinball Hall of Fame or Pinball Museum. I think it's the Pinball Hall of Fame. It is absolutely awesome. If you're a pinball fan, it's one of the greatest places on earth, because what they've done is they have rows of pinball machines separated by year. And I think the first one goes like 1919. And it's got little wooden sticks for the paddles. And I just grabbed, $50 worth of quarters, and I went down and started with the old stuff and just went down every aisle and came to the 60s and the 70s, the 80s. And then you get to the 2000s, which is like, 3 layers and 15 balls, and like live bands are playing on your screen. It's crazy, but fun. I love pinball as well. You got me started on that one, John. All right, for mañana, what do I have for earnings calendar? So obviously we talked about the economic calendar for today and earnings calendar for today. Here's what's cooking for tomorrow. This is the popcorn trade of the day. I think I should add some theatrical sound effect to this graphic. I think the graphic's kind of fun. But that popcorn trade of the day is Amazon Faux Show. They're reporting aftermarket. So also reporting aftermarket, Ford, Activision, Snapchat, which maybe they reported today. Maybe that's why they're down so much after hours. But boy, Snapchat getting murdered. And then before market opens tomorrow, we got drugs, Cheech, you got Merck, you got Abiomed, WestRock, and Eli Lilly. So 3 drug companies reporting tomorrow, and then WestRock, which who knows what they do. They're probably out west. That is your earnings announcements for tomorrow. And on the economic calendar, I didn't have anything. I didn't bring it up, unfortunately, because I'm just unprepared for today. I know. It's a typical day for Merlin. Unpreparedness. For tomorrow, we do have the British pound. They have their rate announcement. That's going to be at 4 a.m. Pacific time. So that's wee hours of the morning. Most people will be asleep. That will already be impacted into our markets when they open tomorrow. You also have the euro coming out with their main refinance rate at 4:45 a.m. Pacific time. So you have 2 major announcements. Right now, the expectations are that the euro is going to keep their rates the same, but the UK is going to raise by 25 basis points. Again, lift off has become, and we're starting to see these things move forward. For the US tomorrow, you have unemployment claims, non-farm productivity, unit labor costs. You have ISM services PMI, because we just had manufacturing PMI. And then one last one, which I will bring up here, is UNG, and look at natural gas futures. Natural gas storage numbers come out tomorrow, but this has really just been a ridiculous mover. The volatility that I've seen in natural gas over the past 2 months has been just unbelievable how big this thing is moving. It's up almost 100%. Like, here's the gains from January 20th. So we are not even a month past that, right? This is 7 days ago. You're 44% gain. 44% gain in natural gas prices. Of course, I think this has a lot to do with the big nor'easter coming in, but we could get a much bigger reading on that tomorrow with that natural gas storage stuff. Is it unemployment numbers that are coming out Friday? Word is it won't be good. Well, I mean, whose word? Whose word? So here's what's happening on Friday. Of course, I'll tell you what's happening Friday on tomorrow's show, but you can see you've got unemployment rate, and this is the one that everyone's focusing on. It's the unemployment rate, non-farm employment change. Now, of course, we had non-farm employment change numbers today, but that's ADP. That's a different reading of it, and you have average hourly earnings on Friday as well, but we'll talk more about that on tomorrow's show, because it's almost Friday already. Hard to believe. Okay, that's going to do it for me. We are tipping on a 1-hour show. So again, thank you guys for all the patience. Sorry for the unorganization today, but I was giving presentations and just didn't have time to prep a normal show with all the graphics and typical stuff I usually do. But anyway, thank you guys for the support today. If you have comments, feedback, put them down below the YouTube video. That helps me out. Of course, you can always email me at TraderMerlin@gmail.com. And if you're new, hit that subscribe button, everybody. I will see you tomorrow. Take care.